Joining us this morning is Ed Francisco, the president of BDO Capital and Investment Corporation. As one of the most respected figures in the country's investment banking industry, he'll be sharing his insights on the financial markets and their implications for businesses and investors alike. Good morning, Ed, and thanks for being here with us.
Good morning, Maiki.
Okay, Ed, we just got the latest inflation print. Can we get your comments on that?
Yeah, no, the number is at least well within the range. I'm very happy with it because we are already feeling, of course, the effects of the depreciation of the peso, making fuel and food more expensive, right? Of course, rice is the key. So the fact that it's still below 3 is great. As long as we continue that way, at least that gives the government ability to maneuver, especially for the decisions that they will have to do on Thursday when the BSP Monetary Board meets.
Mm-hmm. Now, inflation at about 3%, 3.2% year to date. What does this tell you about where we are now and where we're headed? And how might this influence the BSP stance on monetary policy?
Yeah. I think the fact that it's at that level is good. That's showing that we, our economic managers and the Department of Agriculture is managing our rice stocks well, and fuel is being managed, right? The importations. So that's good because that means now that hopefully Governor Ellie and the Monetary Board will take that in consideration, gives them more leeway to reduce rates further. I guess the key really is we're waiting also on what the Fed will do because the Fed should make their announcement. I think early in the morning on Thursday, we will know if they've reduced rates or not.
That's right. Strategically, the Federal Open Market Committee just comes just before the BSP meets. The Fed meets December 17 to 18. We meet on the 19th. So there's what we're going to do, and expectations are for a 25 reduction. But that could be on hold depending on what the Fed does. So really, we're just trying to price in what might happen. But then again, Ed, lower interest rates are a double-edged sword. While they support economic growth and they support spending, they lead to, they could drive inflation higher, and they could lead to weakening of the local currency, which has been flirting with very difficult levels. Can you talk to us about how the BSP can and should maintain this balance?
It's really a delicate balance. I totally agree. So Governor Ellie and the rest of the Monetary Board will have to consider the effects on the people. I just hope that the fact, because inflation is at least being managed better now, it's well below the 4% headroom, right? So that gives us the ability even for the peso to depreciate. If it depreciates because we bring down rates, but if people naman have more money in their pockets because of lower interest expenses from their credit cards, housing loans, etc., their car loans, then it might be good anyway also. So the key really is what the US will do. And if the US doesn't decrease rates, then that gives also the BSP a chance to pause. I'm excited to see what will happen on Thursday.
Yeah, anyway, we're going to be finding out soon. In any case, in terms of currency implications, everybody's pricing in a 25 basis point reduction. Should that pan out, what are your expectations for equities and the peso in this scenario?
Okay, if we reduce rates further by 25 basis points, and that's whether the US reduces it or not, that means that we are just at par with the interest rates, the spread with the US rates. So that means the peso will continue to be weak. BDO, our house view is we're expecting the peso to strengthen to around 57.50 end of this year, only because of the BPO inflows, the OFW inflows, thanks to that. But if not for that, then the peso would really be weak. And then, of course, next year we're expecting to depreciate. And then what does that mean for the market? Of course, because the foreign investors want to make money not just from their earnings and dividends, but if the peso depreciates, when they convert it back to dollars, they take a loss. So we want also the peso to be stable. Otherwise, it will not invite more investors in. So the market, we're hopeful, but I'm not seeing a big pickup until maybe another 100 basis points decrease in interest rates. In the meantime, people are watching, and we're watching what happens when Mr. Trump takes over and what happens with all his nominees.
That's right. In the meantime, over the short term, are you, historically, not It's not always, but sometimes the PSE index experiences what is known as the phenomena of the Santa Claus rally, whereas towards the end of the year, we see some buying action as healthy optimism as investors also adjust their portfolios at the end of the month. Given this scenario, no one knows what the US Fed is going to do. Trump isn't going to take office until January 20th. Have you discounted, have you taken that out of the equation, the possibility of a Santa Claus rally or perhaps a subdued one in this range-bound market?
Correct. There will be a subdued rally, admittedly. I mean, if we can make 7,000, 7,200 for year end, I would already be happy. I think the last year the closing was around 6,400, 6,600, I think. So if we reach 7,000, at least it's already it's almost a 10% increase from last year, which is good. Of course, we peaked at around 7,100 already earlier this year, but that's fine. There will be a pickup anyway, end of the year, of course. So I'm hopeful for that. And then, of course, January again, it will probably be lackluster. We'll be waiting for more news. But there will be some positive news also coming up.
All right. We've got so many more questions for you, Ed. Not much time, so let's try to go quickly.
Okay.
On the exodus of foreign capital, equities are weak. We've seen significant outflows of foreign capital from the equities market, from emerging markets in general, given the risk aversion. People don't want risky assets. They're going back into the U.S., the perceived safe haven of U.S. stocks in the midst of all this uncertainty. But at the same time, we're seeing long-term capital placements. There is a promising front in terms of long-term capital placements, which is really what we want. We don't want the hot money. We want the money, the long-term placements that are not easily removed from the Philippine economy. Can you give us an idea from your perspective, what is the outlook of investors and what are the long-term capital placements that they want to pour into the country?
Thank you for that question, Mikey, because that's true. The index is not really showing the strength of the economy. I mean, of course, while for me, because I'm a trader and investment banker, I want the index to be strong. But underlying that, there's so many deals happening. They're done privately, especially in the energy space. What we talk about, an exodus of whatever, but the Actis Group just invested $600 million into Espinec or the Meralco, the Terra Power Solar. I was there when the president inaugurated or when they were doing the groundbreaking in Gapan. There are many more projects. In fact, I'm having lunch with the group of, I think it's Canadian trade minister or delegation because they want to understand more. Yesterday, I was a speaker with a conference with all our foreign I guess DTI experts because helping them answer questions on what's good to invest in the Philippines because there's so many queries, especially even from Europe right now. I expect energy because of the JAP auctions. We're working with some groups like these Copenhagen partners. Hope to help them when they win, hopefully win JAP, which is auctions for offshore wind. Those are also in hopefully the several deals will be 5 to 700 million, $1 billion each. So they're significantly large and they will require foreign investments. And these are led by foreign investors. So there's a lot happening. And then, of course, these other unsolicited projects of the government also, foreign also. So it's exciting. We just don't know it. And then I've done a lot of private deals for M&A. These are foreign private equity money coming in. So it's not just being reported, but in reality there are investments coming in.
Okay, that's good to hear that we have the long-term place and the hot money that comes and goes, but it's a long-term trajectory that we want, the billions of dollars invested right here. Okay, on to some holiday finance fun, Ed. It's that time of the year. So we've got a couple of quick, easy, I don't know about easy, but I know you can handle this. Okay, stocking stuffers for the future, Ed. If you could gift your family or inaanaks with an investment that would grow over the next 5 to 10 years, certificates that you would stuff in their stockings, what would you give them?
Okay. If it were a Philippine investment, I think personally I would give them ICTSI. Only because it's I believe in Mr. Razon and his management team and they're a five-bagger. They've been increasing multiples and because they continue to grow, he's willing to thread where others don't. But he's very aggressive, but at the same time he manages risk. So I think that's a very good investment to hold for the next generation. Then to give to your next generation, a la Patek Philippe.
Yeah, and if this showing of 2024 is any indication of what they can do, I was on the Bloomberg terminal a couple of days ago, and if you type MRR and you pull up the list of the top stocks in the country year to date that have just really increased by a lot, ICTSI is one of them. So it's good to know that even though they're high now, there's more to go. Okay, another one, Christmas bonus spending. A lot of people are getting their 13-month pay, this bonuses this time of the year. What would you advise them to do with this extra windfall if they haven't spent it already?
Okay, if they haven't spent it, if they could, I would give a portion of it to feed the needy. Maybe donate a Christmas basket to give to those who were hit by the typhoons, and then the rest maybe use it for their Noche Buena, because I guess it's a time to be grateful for what we have. Yes, we have some misfortunes, but we look on the positive side and be grateful and spend time with our families. That's my wish.
Okay, all right. Last question. Gift for the economy. If you could gift the Philippine economy with a gift, what would this gift be? As Ed Francisco, the president of BDO Capital and Investment, what would you give the Philippine economy?
Okay, this is my suntok sa buwan wish, but I hope it can happen. The government is hampered on one hand because and outside to rely on the private sector, diba? And we appreciate that. We're doing our part. But because we had to do a lot of funding during COVID, we had to borrow a lot. My wish is sana, maybe the multilaterals or the people we borrowed give a haircut to the Philippine debt. If we are able to reduce that significantly, then suddenly we have so much ammunition for the infrastructure, social, education. It will help a lot. So yun lang sana. Sana they cut our debt or they give us a reprieve or they extend, reduce the rates. That will help a lot. Thank you.
Okay, expunge our debt. Your wish sounds like wishful thinking, but that was the point of it all. What a nice gift that would be for the Philippine economy. Thank you so much, Ed, for sharing your insights on the market and more with us, as always.
Bye-bye. Thank you, Maiki.
Good afternoon. I'm Mai Rodriguez. Today on Newsfeed at noon, lawmakers voted to impeach Yoon on Saturday over his botched attempt to place a country under martial law. The Fighting Maroons dethroned the De La Salle Green Archers. The Pope noted how happy he was with the number of children he saw in Corsica during his visit. Another school shooting rocks the U.S. A teenage student opened fire. And those are the news this hour. I'm Mai Rodriguez.
Now, while the Philippine economy grew at a slower pace than expected in the third quarter, the government still remains confident that they can still meet their 6 to 7% growth target for the full year. But how realistic is this goal given the continued external headwinds? I sat down with BPI's lead economist, June Neri, to discuss this outlook and more, and to see what a potential Trump 2.0 presidency in the United States could mean for the country's economic policies. Here is that interview.
Q3 GDP was just released. It came in at 5.2%, slowed a little bit from the 6.4% growth in the second quarter and the 5.8% in the first quarter. Was this figure in line with your own expectations?
Yes, we submitted 5.3% to Bloomberg's poll. Yeah.
Okay, so GDP at 5.2% in the third quarter. What does this say?
Well, if you look at the components or the factors that led to the slowdown, Mikey, first on the supply side, it was agriculture. It continued to suffer from bad weather. It continued to suffer from the threat of cheaper rice imports. No? That's why total production in rice was actually down 12%. No? So hopefully with with improving weather for the months of November and December, we'll be able to make up for some of those losses. No? So it's a weather phenomenon. It's something we couldn't really avoid. No? In the second quarter, we contracted in agriculture because of El Nino. In the third quarter, it's because of the floods and the typhoons. No? So hopefully, the fourth quarter will not be as bad. The other source of slowdown is net exports, which, if you try to look at the breakdown, is largely a result of an improvement in imports. No? Which is really actually a mixed message or a mixed indicator, because while imports are subtract from the GDP, it's actually a sign of demand picking up. That means that overall absorption of the economy is improving, and that's actually mirrored by improving consumption numbers. For the first time in 3 quarters, Mikey, we're seeing household final consumption grow above 5%. No? And that's even happening when BSP has only had one cut, no, in August. No? The latter part of the third quarter, we had a rate cut from the BSP, a small rate cut. You would not really imagine that being the cause of the strength in consumption. Because of cheaper rice prices, we saw an improvement in household spending in 3Q with a growth rate of more than 5%. So the import number is actually a mixed bag. It contributed negatively to the accounting, but it's actually a positive sign because it means overall demand continues to pick up. So on the whole, if it weren't for agriculture and the weather, the economy would have probably grown 6% as well in 3Q. No?
Yeah. Now we've got to hit 6.5% growth in the fourth quarter just to meet the lower end of the government's 6 to 7% target range. Do you think 6.5% growth is attainable for Q4, given the seasonality, given that the weather is better, given that it's the holiday season, and then the inclination is really to spend at this time of the year?
Yeah, we think it's possible, Mike. It's very feasible. Just a slowdown in imports and a big boost from exports of services and the sustained increase in investments. Actually, the investment numbers for the third quarter are actually pretty strong. If we can just sustain that in the fourth quarter, combined with better weather and, again, some improving momentum in consumption, we can't really rule out a 6.5% outcome for the fourth
Do you
quarter.
think we can sustain that momentum, especially on the heels of a Trump victory in the United States?
We think it will be a little bit more complicated for the Banco Central this time because it looks like while we can continue with the rate cuts this year, the prospects for aggressive rate cuts in 2025 are not as, the space is not as roomy as before.
Wide. Right.
Yes. So
Right. Yeah.
this means that we could see an end to the cuts sooner or less cuts than anticipated. But next year's an election year, so we're not too worried about overall spending. Our politicians.
And we're not too worried on the local front because our fundamentals are good and the trajectory is good, but the external headwinds are something to consider because Trump's policies are US-centric. That's going to drive growth, but it's also going to lead to higher inflation and a bigger deficit. How is that going to ricochet?
Yeah, that's really going to be a big challenge, Mikey. But there are solutions. There are ways to go around it. Like we are members of many trade agreements, including the RCEP, the ASEAN, name it, JPEPA. So many trade arrangements that we can tap as a way to make up for possible challenges arising from U.S. protectionism. No? So we're very strong in exports of services. In terms of migration, Filipinos are generally preferred because of their English and their skill set. So it may not necessarily translate to a weaker performance for the Philippines next year if we consider these factors. No?
And new administration in the US, new economic policies, it's really a natural progression. It really happens that way. But in terms of monetary policy, we're not expecting any big swings, any big changes. The course will be as is. What are your thoughts on this?
Well, there is a risk that because of higher tariffs and possibly higher wages, Mikey, because of reverse immigration, um, this could cause inflationary pressures in the US to bounce back. No? So they've been able to tame inflation for about 9% in 2022. They've been able to bring it down below 3%, which allowed them to start cutting earlier this year. But if the higher tariffs and more expensive labor, because you're not allowing as many people to come in, no, into your country, causes inflation to rebound, then the Fed might have to stop cutting rates, maybe even at one point be forced to hike rates. No? So that kind of concern, which is actually supporting the dollar at the moment, no, with less cuts and possibly even rate hikes in 2026.
It's going to be a while for those policy changes to happen and to really take effect. In the meantime, the Bangko Sentral ng Pilipinas is going to be meeting in December to talk about interest rates. Expectations were for a small 25 basis point rate cut, which would bring the cumulative rate cuts for the year to 75 basis points. What do you think the BSP's Monetary Board is going to do when they meet on December 19th to talk about interest rates?
Yeah, well, if you look at domestic data, Mikey, you would think BSP will really continue with the rate cuts, no? Since inflation is still well below the 4% upper end of the target, GDP is slowing down, no? So most of these indicators point to the BSP resuming the rate cuts. They're still at 6% at this point, and inflation is only around 2.5%. So quite a lot of room there as far as managing inflation is concerned. However, the peso has become a lot more volatile now, as you have seen from last night's and yesterday's price action. And if the Fed, by some chance, decides to pause in their December meeting, because it looks like it's a done deal for November, they do decide to pause in December. And if we do see things moving fast in the US for all of this legislation to increase tariffs happen very quickly, or anticipated to happen very quickly, because remember, it's a red sweep.
Yes,
it's not just Mr. Trump who won.
Everything. Yeah.
Yeah, so there's going to be very strong support on the part of U.S. Congress and Senate, no, on his initiatives, on his
yeah, he'll have the latitude to do what he wants to do when he wants to do it. What does that mean for us?
Those plans and promises can be implemented quite quickly, and that is what has put the market on edge on currencies and why the dollar has been strengthening. So while the BSP doesn't seem to be too worried about the peso's weakness, very rapid strengthening of the US dollar could actually lead them to be a little bit more conservative on their stance, regardless of what the local numbers show us. No? So there might be some skips in the rate cuts, maybe even pauses at one point.
As an economist,
because of these considerations, yes.
Those considerations, exactly. As an economist, do those considerations scare you? The fact that we're going to have Trump 2.0, the fact that he's going to have control of Congress and the Senate, is it too much power?
Well, the point is his plans, his campaign promises are probably going to be put in place a lot faster. No? It may not be as exactly as he had laid it out during the campaign. Of course, there's always a gap between campaign promises and reality, no? Because he will have advisors who will probably keep him from being too aggressive with the tariff hikes. But the speed by which they can carry out all of these reforms is looking a lot faster than many people anticipated. I think very few analysts saw a dominant Republican government coming in by January.
Said it, a dominant Republican government via a clean sweep. That said, the biggest the biggest occurrence was really Trump's win. Does it change your projections for GDP and for the year-end target for the currency and for the PSC index?
Yeah, for inflation and policy rates, as well as the dollar peso, Mikey, there will need to be some revisions. I think that need be put in place for next year. For growth, we're not really all that worried, even if the BSP doesn't cut as aggressively as anticipated. We think again there's very strong momentum entering the midterm elections next year. And with slower inflation, consumers will really benefit a lot here in the Philippines. Now, we've been seeing a pretty significant deceleration in inflation, and really, it's the BSP has done a good job in making that possible. Hopefully, the national government will also follow through with reforms like agriculture supply and all of these supply side interventions to sustain this manageable inflation environment. If that can be kept in place for most of next year, I think our growth trajectory will not be disrupted all that much. No?
Over the more short term, how does
So that means for the market, it's
we'll finish the
essentially
year?
okay.
Yeah.
Yeah.
Where do you think we'll finish the year? Inflation, GDP, the peso, and the stock market.
Okay, so for inflation, we're looking at a full year average of around still 3.2, 3.3%, which is already within target. So the last 2 years, we failed to meet the 4% target. We were at 5.8 and 6. No? So for the first time in 3 years, we'll finally be on target. And next year, there is a very big chance we will be on target again. So that provides a lot of relief to consumers who, after COVID, had to experience back-to-back high inflation rate years. No? So finally, some relief. Now, Mr. Trump's coming in will probably make the peso a little weaker, some pressure on import costs, but probably not enough to bring us back above 4% for the whole of 2024. The whole of 2025. So with that kept manageable, BSP will probably be able to resume the rate cuts, although not as aggressively as before. So instead of looking at, say, 5% on the policy rate at the end of next year, we'll probably end up closer to 5.25, 5.5. Inflation, instead of our original forecast of around 2.9% next year, it will probably look more like 3.1, 3.2, still within target.
Slightly higher.
Yeah, but the exchange rate will probably remain under pressure. This year, probably closer to 57, as the remittances flows will probably help the November and December numbers improve a bit. But as we enter 2025, peso might start to come under pressure again, Mikey, as again, the policies of Mr. Trump will probably start to kick in maybe mid-year of next year, maybe late next year, to make the dollar even stronger. For GDP, this year probably slightly under 6%, not too far from 6%. Next year faster, at around 6.2, 6.3, again, because of the elections.
Okay, and the PSC index?
For this year, we're still hopeful for a Christmas rebound towards the 7,200 level. We were there already earlier this year, and it's just this correction that is probably making it a little bit more challenging, but it seems like 7.2 is still realistic at this point. Once people digest the real impact of the Trump win to the Philippines, I think at some point there will be some optimism. And then for next year, looks like there's a big chance we can get closer to the 8,000 plus level, just because the fundamentals continue to remain strong and valuations in the Philippine market still remains fairly valued. In fact, a discount compared to historical and I guess a cross-country analysis. No?
Yeah. So the upside is there, especially given the declines as of late.
Yeah, so let's wait for the dust to settle first on the Trump win. Yeah,
you said it. Let's wait for the dust to settle on the Trump win. Okay, June Daring, thank you so much for your time.
Welcome, Mikey.